pressure on Moscow over the war in Ukraine. Countries like China and India say they will continue to buy oil from Russia, and Russia is threatening to cut supply to any country that actually adheres to this price cap. Well, let's talk this through with economist and energy analyst and regular on this programme, Cornelia Meyer. Lovely to see you, Cornelia. So if we start with OPEC Plus, they are sticking to their guns. We expected that, didn't we?
Yes, we did. I mean, I was actually on this channel some time ago saying they will stick to the program as is, and it does make sense from their perspective because they need to see how this the price cap pans out, and they also need to understand how the embargo of Russian crude into Europe pans out. So it's a wait and see attitude. And you talked about the higher oil price. That is only partially due to the OPEC decision. It is very much also because China keeps on quite aggressively now loosening the COVID-19 restrictions, and that obviously has a great impact on demand.
Yeah, absolutely. And we'll be talking about that a little later in the programme. But just to say, when it comes to the changes today for Russia, the EU ban on importing Russian oil and also the price cap, talk us through the impact on as far as that is concerned for both Russia and for Europe.
Well, for Europe, no longer being able to import Russian crude obviously will have an impact. They will get more crude from other places like the GCC countries. So that will, a longer transportation period will have an upward effect on the price. That's one. Secondly, when you look at the price cap, what it means is that you have the price cap, and if you adhere to that, you can still use Western insurance, Western finance, and Western ships. But the Russians have built a sort of a shadow fleet of their own. Russia, India and China don't really want to adhere to the cap because they have other larger geopolitical considerations in terms of their relationship with Russia. So we will have to see how it all pans out and how the insurance market will pan out, because the Russians have their own insurance that they can give, which is no way near as good as the Lloyd's of London cartel type insurance that we see. But there are alternate mechanisms in place now.
And Russia, of course, threatening to cut supply to any country that adheres to this price cap that's been imposed by the EU, by G7, by Australia. If it follows through with that threat, I mean, this could be quite a bit of disruption in the short term, couldn't it, for oil markets and the price? I mean, what's your thoughts on how the oil price will be impacted by all these changes taking place?
I think there is an upward pressure, and especially as China starts loosening at the same time, on one hand. On the other hand, as I said, I don't think China, India, nor Turkey, for that matter, who are at this point the big buyers of Russian crude, will budge and will adhere to the cap. However, what that means is that those three nations and the few other nations who don't adhere to the cap have enormous bargaining power. And you see that currently Russian crude gets sold at a deep discount into those markets, which are below the $60 cap, by the way.
And just briefly, Cornelia, we've touched a little bit on what Russia's threatening and how Russia has built up this sort of shadow fleet. It's been preparing for this. How hard will Russia be hit, do you think, by both the EU ban on imports and the price cap?
I think it will be hit by the EU ban. It will be hit by the price cap, but it is hit basically. The price cap will mean that the people who are still buying Russian crude have bargaining power. And when people have bargaining power, that always results in discounts. But for Russia and its finances, it is a matter of volume times price. So we will have to see how much volume they can push out to India, China, Russia, and so on.